Imagine this. You're a retiree living on a fixed income. Your money is tight but manageable. And then a letter arrives telling you that Medicare now considers you a high earner, and your premium is jumping to nearly $700 a month. Not 200, almost 700. And the reason? Something you did back in 2024 that you'd completely forgotten about. This is happening to real seniors right now, in 2026, and most of them never see it coming. I'm Artur. I've spent more than 20 years helping American retirees protect their benefits from the fine print nobody bothers to explain. And today, sitting here like we're across the kitchen table from each other, I'm going to walk you through exactly what just happened to Medicare Part B, who is really seeing a smaller check, and the 3 simple free steps you can take this week to protect your money. And stay with me all the way to step 3, because that's where I'll show you the one mistake that even careful, rule-following seniors keep making, and it's quietly costing some of them hundreds of dollars every single month. Let me start by telling you about Margaret. Margaret is 68. She lives in a quiet neighborhood in Arizona. She worked as a school administrator for over 30 years, and she's careful with money, the kind of woman who balances her checkbook to the penny and reads every letter the government sends her. In 2024, Margaret did something completely normal. She sold the family home after her husband passed. It was too big, too full of memories, and too much to keep up with. The sale put a large, one-time chunk of money in her account that year. Nothing improper, nothing she should feel bad about. Just a woman selling her house. But here's what Margaret didn't know. Medicare looks at your income from 2 years ago to decide what you pay today. So in 2026, when Medicare calculated her premium, it didn't look at her modest current retirement income. It looked back at 2024, the year of the home sale, and decided Margaret was a high earner. Suddenly, her Part B premium wasn't the standard $202.90. Because of that income spike, she was pushed into a higher bracket, paying a surcharge of hundreds of dollars more every month. On her real day-to-day income, that hurt. A lot. She called Social Security in a panic, certain there'd been a mistake. Here's the most painful part. It was completely avoidable. There is an official form, a free form, that Margaret could have filed to tell Medicare, that income is gone, my situation changed, please recalculate. She just didn't know it existed. And Margaret is not alone. According to the official numbers from Medicare, these income-related surcharges hit about 8% of everyone enrolled in Part B. That's millions of seniors. Many of them, just like Margaret, are paying more because of a one-time event they never connected to their premium. So let's break this all down piece by piece so it never happens to you. Here's what Medicare actually says. The standard Part B premium for 2026 is $202.90 a month. That's up $17.90 from $185 last year. Part B is the part of Medicare that covers your doctor visits, your outpatient care, and your medical equipment. And here's the key thing. That premium gets pulled straight out of your Social Security check automatically before the money ever lands in your bank account. In plain English, that means you don't write a check for it. Social Security quietly subtracts it first. So when your deposit looks different, the premium is usually the reason, not some cut to your benefits. What you should do here is simple. Know your number. $202.90 is the standard. If you're paying more than that, there's a reason, and we're going to find it. Now let's talk about why your check might actually look smaller. And here's where I need to be honest with you, because a lot of videos out there are not. Here's the official rule. This year, Social Security gave everyone a cost of living raise, what they call a COLA, of 2.8%. For the average retired worker, that raised the monthly benefit from about $2,015 to $2,071. That's roughly $56 more a month. In plain English, that means for most people, the raise of about $56 was bigger than the premium increase of about $18. So the average retiree's net check actually went up by around $38 a month. Let me say that clearly because it matters. Most people's checks did not shrink. They grew a little. So who really did see a smaller check? That's the important question. What you should do is figure out which group you're in, and that's exactly what I'll show you next. Now here is the part that most people, including financial advisors, get completely wrong. Your Medicare premium for 2026 is not based on what you earn today. It's based on your tax return from 2 years ago, from 2024. Read that again because it sounds wrong, but it is officially true. A retiree living on a tight, modest income right now can be charged the very highest bracket, all the way up to $689.90 a month, purely because of something that happened back in 2024. Maybe you sold a house like Margaret. Maybe you took a big withdrawal from a retirement account. Maybe you did a Roth conversion. Any of those can spike your income for 1 year, and Medicare looks back, sees that number, and decides you're wealthy today, even if your income has since dropped right back down. In plain English, you can be treated as rich by Medicare in 2026 for a one-time event in 2024 that's long gone. That is the trap that catches good, careful people. And here's what you should do. If your income 2 years ago was unusually high and it's lower now, you do not have to just accept that surcharge. There is a way to fight it. And that's step 3 of my action plan. Let me explain who those surcharges actually hit. They're called income-related adjustments. They start once your income from 2 years ago goes above $109,000 if you're single, or $218,000 if you're married filing jointly. Once you cross that line, the surcharges stack on top of the standard premium, anywhere from about $80 extra a month all the way up to nearly $500 extra a month. So the people whose checks truly shrank this year are mainly higher earners, the newly enrolled, and folks with very small benefit checks where even a small increase stings. That's the opposite of who most people assume. And one more thing you need to know about the cost. If you didn't sign up for Part B when you were first supposed to, there's a late enrollment penalty. It adds 10% to your premium for every full 12 months you could have had Part B but didn't. And here's the cruel part. That penalty lasts for as long as you have Medicare. It's basically permanent. So delaying enrollment isn't a one-time slap. It follows you for life. What you should do, if you're approaching 65, sign up on time, every time. All right, here's exactly what to do. 3 steps. Just 3, because 3 is what you'll actually remember. Step 1, check your number. Look at your Social Security statement or your Medicare paperwork and find out exactly what you're paying for Part B. If it's $202.90, you're paying the standard rate and you're fine. If it's higher, write down that exact amount. You can see all of this for free by logging into your account at SSA.gov or by calling Social Security at 1-800-772-1213. This takes about 10 minutes and it costs nothing. Step 2. Confirm why. If you're paying more than the standard, it's almost always one of 2 reasons: an income surcharge based on your 2024 taxes, or a late enrollment penalty. Pull out your 2024 tax return and check whether your income that year crossed those lines I mentioned. 109,000 single, 218,000 married. If it did because of a one-time event, you may have a strong case to lower it. Step 3. This is the one most people skip, and it's the one that saved Margaret. If your income has dropped since 2024 because of a major life change, you retired, you lost a spouse, you got divorced, you lost a pension, you can ask Medicare to recalculate using your real current income. The form is called Form SSA-44. You can download it for free at ssa.gov or request the change online at ssa.gov/Medicare/lower-IRMAA. Fill it out, attach proof of your life change, and send it in. If you skip this step, you'll keep paying that higher surcharge month after month, potentially hundreds of dollars a year you never had to pay. The form is free. The phone call is free. Don't leave that money on the table. Before you go, do me one quick favor. Drop a comment below and tell me, did you know Medicare looks back at your income from 2 years ago? Just type yes or no. I read every single comment and I reply to as many as I possibly can. And if you have a parent, a brother or sister or a friend who's on Medicare, please share this video with them right now. This is exactly the kind of thing that quietly costs careful people hundreds of dollars, and a single share from you could put that money back in their pocket. That share button is right below this video. If you're not subscribed to Senior Pension Benefits Hub yet, take 1 second and hit that subscribe button and turn on notifications. I post new videos every week breaking down these rules in plain English, because they change constantly, and you deserve to understand them before they cost you, not after. And in my next video, I'm covering the Social Security survivor benefit mistake that quietly costs widows and widowers hundreds of dollars a month, and most people have never even heard of it. Click right here to watch it next. I'll see you there.